With the current Bitcoin price lower than $30,000 at this moment in time, many speculators are saying that we are now in a cryptocurrency bear market. Well, there's actually some data in the charts that does prove otherwise, and I'll be sharing that with you in this video. So make sure you stick with me until the very end so you learn how to strategize and position yourself for the highest possible returns in the future. Because if there's one thing about cryptocurrency, it's that it always exceeds expectations. It goes higher than you think and it goes lower than you think. So don't get shaken out and learn how to position yourself by watching this video. So let's get right into it and let the gains be with you. So to start this video off, let's take a look at the current market cap. We can see that Bitcoin is currently trading at $29,790 with a Bitcoin dominance still sitting below 45%. So people aren't totally selling off their altcoins into Bitcoin, which means there is some level of confidence in the market at this moment in time. But regardless, these are very uncertain market conditions. A lot of people are saying we're going to drop lower towards the $20,000 previous all-time high range. We're going to hop right into the charts in just 1 second, but we can see prices across the board. Most altcoins are actually bleeding out. We can take a look at the top gainers. We have a few. We have Quant, Ecomi, which is an NFT coin, Dogecoin, all up a bit today. But if we look at the losers, we have a lot of coins, a lot of main altcoins, down 9-10%. So depending on how you do look at things, this could be an excellent buying opportunity to build to your bags, but this is not financial advice. This video is for educational purposes only. So without further ado, let's hop into the charts because I have a very important indicator that tells us whether or not we are actually in a cryptocurrency bear market. So right now we are looking at the Bitcoin US dollar chart on a weekly time frame. And as you can see, we have been trading in a sideways range for about 8 weeks now. So all consolidation does eventually come to an end. So we're either going to be breaking to the downside or to the upside. And right now, obviously, it's looking pretty weak. So we do have this lower candle wick down here at about $28,600 approximately. So this is the must hold line, or else we will most likely be testing a lower level. But with that being said, even if we do test a lower level, I still don't think we are in a bear market. And let me explain why right now. So right now we're looking at a candlestick chart. And the candlestick basically tells us where the main bulk of the trading took place in the given time frame. So each one of these candlestick bars is 1 week of time. And these candle wicks, this is basically the extremes of that trading period. The bulk of the trading took place within the candle body, and the candle wick shows you the extremes of the trading in that period of time. So what we're actually going to do for this video is we're going to take a look at a line chart instead of an actual candlestick chart. So we can head over right here and switch this over to a line chart, still looking at the weekly time frame. And basically this takes out the candle wicks. So we're only seeing data that represents the main trading ranges for the weekly time frame. So what we're going to do right now is actually zoom all the way out since Bitcoin's origin, and the first real bull market did actually take place over here in 2013, 2014. So as you can see over here, this is 2012 and then we're in 2013. And in 2013, Bitcoin took off from less than $100 to about $164, up 1,100%. And notice how we had a very steep correction here. In the early bull market of 2013, we corrected about 55%. So what we're actually going to do now is use the tool that I always use the most for my technical analysis, and that is the Fibonacci price retracement tool. So what we do is we hook our measuring tape at the high of the move, and we take it down to the low, and we hook it down there. And we can see right here that price retraced 55%, and that represents, it's just past the 50% retracement, which makes perfect sense, right? This is all just math and ratios. So basically what I want you to notice is how buyers stepped in right before the 61.8 golden ratio Fibonacci retracement. Now the 61.8 is probably the most important Fibonacci level. It is used in the markets time and time again because it is a calculation of human emotions and human psychology. And as long as humans are trading an asset, we'll be able to use the Fibonacci for our technical analysis. So notice here in the first pump of 2013, we retraced 55%. We never did cross that golden ratio, the 61.8% retracement. From there, after we did drop this 55%, we ended up having a glorious pump. This is the Bitcoin that we all know and love. We pumped approximately, again, 1100% to the high. And now what I want you to notice is I'm again going to take my Fibonacci price retracement tool. I'm going to hook it on the high of the move, take it down to the low. And as we can see here again, when price retraced, buyers stepped in again just before the golden pocket. So the golden pocket held. We pumped back up a bit, but then we actually did break the golden pocket over here. And this is the cryptocurrency bear market. All right, we can't use the term bear market unless we actually do go ahead and break the golden pocket, the 61.8 ratio to the downside. So this was a trading range of approximately 70 weeks time. So over 1 year, we were trading beneath the golden pocket of the retraced move. And this is the bear market. When we break this 61.8 on the higher time frame, we're in a cryptocurrency bear market. So again, we'll move forward into the future. I just want to show you guys basically from previous data, and we can use previous data to measure where we actually are right now. So long story short, we go through that bear market in 2015, and then 2016, price starts to make a recovery, and we have that very well-known bull market that got a lot of eyes on Bitcoin in 2017. So in 2017, we're going to do the same exact thing. We are going to measure from the high all the way down to the low. And as you guys can see here again, price retraced down here to the golden pocket. And then we had a nice bounce of approximately 40%. But then what happened after that is price broke beneath the golden pocket. And when price breaks beneath the golden pocket, that is when we officially enter into a cryptocurrency winter, a bear market. So this was the 2018-2019 bear market that we did experience. And then from there, in 2019, we really started to recover. And then over here in March is when we had that very unexpected black swan event, where price tanked all the way back down approximately to about $3,800. But like I said, this is the line chart. It doesn't account for the candle wicks, right? It's the main bulk of the trading that it's measuring. So regardless, when we break beneath the golden pocket, we enter into a bear market. So the previous bear market lasted approximately 50 days, depending on how you do look at things. So approximately 1 year, we were in the last bear market. So now knowing that the golden pocket is a very crucial indicator of telling us whether or not we are in a bear market, what we can do is use it in the current situation. So I will measure it down to the market crash that happened in March of 2020. So I'll take it to the high, I'll bring it down to that low of 2020 in March. And as we can see here, price is still above the golden pocket level. Okay, so the 61.8 ratio is about $26,000, and then the 0.65 goes down to about 24,300. So this little range in here is what I call the golden pocket. So right now, we are not in a bear market based on previous market cycles and using that data to interpret where we're at, unless we do go ahead and break this 61.8% retracement line. Then I'm not going to say we're in a cryptocurrency bear market. This could very well be like in 2013 when we did actually retrace almost to the 61.8, but buyers actually stepped in and pushed price higher for a second pump in that bull market year. So we have to wait and see what happens. But at this moment in time, looking at the concrete evidence in the charts, it is impossible for me to say that we are in a bear market right now. Everybody on the television, or whether you're looking at it on social media, they can say whatever they want. But this is what the data is saying right now. And people lie, numbers don't. Remember that at all times. These are numbers right here that we're looking at. So this is what I am looking at right now. $26,000 is the line that cannot be crossed. Right now we're at $29,670. So this video is for educational purposes only. This is not financial advice. But with that being said, if you were buying Bitcoin up here at $50,000, $60,000, and you're scared and you're selling at $29,000, looking at the previous data, well, that shows that you are an irresponsible investor. You are not doing yourself the service of buying at lower prices. Because as we can see, even if we do go ahead and we break this level and we enter into a 1-year bear market, with Bitcoin, it always exceeds the previous market high based on previous data, that is, of course. Always remember that past performance does not indicate future results. It's very important. But again, I really seriously think that it's irresponsible to your financial future if you are not at least dollar cost averaging, right? I'm not saying bet the whole farm on Bitcoin right now. I'm saying if you have a spare $100, $200, throw $100 in every single week or every single month. Do what you can given your certain situation, right? That's very important. Always keep that in mind. And now before I do end this video, we got through most of it already, showing you guys how the golden pocket is a great indicator of whether or not we enter into a bear market. One thing that you need to always keep in the back of your mind in cryptocurrency is that you buy these assets and you need to hold them for months, and in some cases even years, to see the return that you want to see. For example, we can see over here the previous market high in 2017 at about $20,000. After we had this market high, we went sideways, you can say, for 150 weeks. So about 3 years' time, we weren't anywhere near close to that previous market high. However, even if you did buy that market high and you just held, you would have been in a profit of approximately 200%, like a 3x. But the thing is, you need to hold with cryptocurrency. You buy and you need to wait for months to years to see the return that you want to see. And notice how when we pump, it doesn't last that long at the top. So you're only going to have an opportunity to cash out on those returns for 1 or 2 months time. So with crypto, you buy, you hold for months to years with the opportunity to make insane gains in a very short limited window of time. So that is why cryptocurrency is a very risky asset class to invest in if you don't know what you're doing. You need to be experienced, or you need to learn and put in the work to get that experience so that you can make a profit from this market, because this market is ever providing, it is offering so much opportunity, but you need to know how it works to capitalize on that opportunity. So to end this video off, I just want to say, remember, you hold for months to years with that short window of time to capitalize on the profit, on the returns that you want. So based off of the data in the charts, it is irresponsible at this moment in time to say that we are in a cryptocurrency bear market. If we do go ahead and break that 61.8 Fibonacci retracement level, then we can reevaluate and come to a different conclusion. But until that level is broken, in my opinion, I would say that the bull market is still intact, but we are waiting to see what does happen next. If you guys enjoyed this video and you did learn something, make sure you let me know by leaving a comment down below and liking this video, and also sharing it with your friends who need to get informed on the current state of the cryptocurrency market. And if you guys aren't already subscribed to Crypto Empire, go ahead and subscribe to the channel right now, and make sure you have all bell notifications turned on so you don't miss any future videos. And my name is Connor from Crypto Empire, and I will see you in the next video.